Mr. X retired from the service of Mrs. Y Limited on 31st 1st 2024 after completing service of 30 years and 1 month. He had joined the company on 1/1/1994 at the age of 30 years and received the following on his retirement. First one, gratuity 6 lakh. He was recovered under the Payment of Gratuity Act 1972. Second, leave encashment of 3,30,000 for 330 days leave balance in his account. He was created 30 days leave for each completed years of service. Third one, as per the scheme of the company, he was offered a car which was purchased on 31st, 2021 by the company for 5 lakh. Company has recovered 2 lakh from him for the car. Company depreciated the vehicle at the rate of 15% on straight line method. An amount of 3 lakh as commutation of pension for 2/3 of his pension commutation. Fifth one, company presented him a gift voucher worth 6,000 on his retirement. Sixth one, his colleagues also gifted him a television LCD worth 50,000 from their own contribution. Following are the other particulars. First one, he has drawn a basic salary of 20,000 and 50% DNS allowance per month for the period from 1st 4 2023 to 31st 1 2024. Second, he received pension of 5,000 per month for the period of 1/2/2024 to 31st 3 2024 after computation of pension. Compute his gross total income from the above for assessment year 2024-25, assuming he exercised the option of shifting out the default tax regime provided under section 115 BSA 1A. So let's do computation of gross total income of Mr. X for the assessment year 24-25. Basic salary 20,000 into 10. Why 10? Because he retires on 31st 1st 2024, which comes 2 lakh. Next, DNS allowance, that is 50% of basic salary, 1 lakh it is given. Gift voucher, let's see note number 1. Note number 1. The value of any gift or voucher or taken in lieu of gift received by the employee or by member of his household not exceeding 5,000 in aggregate during the previous year is exempt. In this case, the amount was received on his retirement and the sum exceeds the limit of 5,000. Therefore, the entire amount of 6,000 is liable to tax as per requisite. Gift voucher 6,000. Next, transfer of car. See note number 2. Note 2. The value of benefit to the employee arising from the transfer of an asset, being a motor car, by the employer is the actual cost of the motor car to the employer as reduced by 20% of WDV of such motor car for each completed years during which such motor car was put to use by the employer. The rate of 15% as well as the straight line method adopted by the company for depreciation of vehicle is not relevant for calculation of perquisite value of car in the hands of Mr. X. Therefore, the value of perquisite on transfer of motor car put to use is 31st 2021. Purchase price 31st 2021 5 lakh less depreciation 20% 1 lakh. WDV on 29/1/2022 4 lakh less depreciation at 20%, that is 80,000. WDV on 29/1 2023 is 3,20,000 less depreciation at 20% 64,000. WDV on 29/1 2024 2,56,000 less amount required, that is 2 lakh. The value per requisite 56,000. Therefore, the transfer of car is 56,000. Gratuity. Let's see the note number 3. Gratuity received 6 lakh less exempt. First one is notified limit 20 lakh. Second, actual gratuity 6 lakh. Then third one 15/26 into last round salary into number of completed years of service or part in excess of 6 months. That is 15/26 into salary equal to basic salary plus DA. That is 20,000 plus 10,000, which is equal to 30,000 into completed years. That is 30, which comes 5,19,231. Out of the three, 5,19,231 is the least, which is subtracted from 6 lakh, which so the taxable gratuity is 80,769. Next, leave encashment. Let's see note number 4. Leave salary received 3,30,000 less exempt. First one is notified limit 25 lakh. Second one actual leave salary 3,30,000. Third one 10 months into salary, that is 20,000, which means salary, only basic salary, not DA. Fourth one is cash equivalent to leave to his credit, that is leave due divided by 30 into average salary. 330 divided by 30 into 20,000. Else you can also take average salary of 10 months, that is 2 lakh, which is divided by 10. In both, the answer is 2,20,000. So out of this, the least is 2 lakh, which is less from 3,30,000. So the taxable leave encashment is 1,30,000. Therefore, leave encashment is 1,30,000. Uncommuted pension, that is remaining 2 months, that is February and March, that is 5,000 into 2, that is 10,000. Next one, commuted pension. Since Mr. X is a non-government employee, in respect of gratuity, exemption under section 1010A would be available to the extent of 1/3 of the pension which he would have received had the commuted the whole of the pension. Therefore, amount received 3 lakh less exemption under section 1010A 1/3 into 3 lakh into 3/2. That is 1,50,000. So the taxable amount is 1,50,000. Therefore, the gross salary 7,32,769 less standard deduction under section 16(1)(a) 50,000. Taxable salary or gross total income comes 6,82,769. That's all. Very simple question.